Hello everyone. So we'll continue our discussion where we are solving questions from financial statements. Now today we'll take up some more questions where we will understand some critical adjustments. A lot of students I see get confused with adjusted purchases that we'll be covering, and we will start adding more and more disclosure requirements for each of the questions. Okay. So let's have a look at this question. The question is pretty simple. It's not complicated. Just apply the logic that I have taught you in the previous classes. I'll tell you, by the time you solve all the questions alongside me, you will be the most confident person to appear in the examination with respect to financial statements. So let's look at this illustration. Following is the trial balance of Omega Limited as on 31st March of year 2. Land at cost 220, plant and machinery at cost. See, they have clearly mentioned at cost, means this is the gross value. We will need to add the accumulated depreciation when we compute the balance sheet numbers. All right. Then trade receivables, our sundry debtors. Inventories. Now here is where I want you to pay specific attention on the date. Generally, we tend to ignore the dates. Here the date is 31st March of year 2. And here the date is also 31st March of year 2. Now, what does that mean? I already told you that if closing stock is appearing on the balance sheet, this is closing stock, right? And one number can make the difference. If the closing stock is appearing on the balance sheet, means what? The purchases have been adjusted. The purchases have been adjusted. Now, either you will get cost of goods sold in the balance sheet or adjusted purchase in the balance sheet. From this, we will need to compute what is the purchases. Please remember, friends, in the question or in the schedule 3 P&L, we have to show the purchases. So, when we have this is important, put a star mark, closing stock in the balance sheet and adjusted purchases is given. So, if adjusted purchases are given, what do? We will have to compute the purchases. When we solve the question, we'll understand that. Then, also I told you that if inventory is given in the trial balance, it means it will appear only in the balance sheet. All right. Then we have bank. Okay. Factory expenses. Now, as I told you, no need to worry. Direct, indirect expenses, no need to worry. Do we have a head for factory expenses? No. So, where will we put this? Other expenses. All right. Then administration expenses, selling expenses, debenture interest. Now, when you see this term called debenture interest, the thing that should come to your mind is full payment or full provision made? 200 of debenture, 10%, 200 into 10, 20, fully it is made. So, you can continue. If it is not provided for fully, then we may have to create a provision. Interim dividend paid. Now tell me, friends, where will this interim dividend paid come in P&L or balance sheet? Dividend is appropriation of profit. From the profits that is earned, we pay dividend. From the profits that is earned, we pay dividend. So, dividend is not something that will come in the P&L account. Dividend is what? Dividend is appropriation of profit or distribution of profit. So, if I am distributing the profit, it will not appear in the P&L. Where will it appear? It will appear in the balance sheet, where we will reduce from the P&L balance. It is like when we distribute profits to the partners, right? So that comes in the P&L appropriation account. Same way here, we don't have something called as P&L appropriation account. We will show all the dividends paid as a part of the balance sheet and not as a part of the P&L, whether it is interim, whether it is final, whether it is preference. Okay, so make a note of this. I told you, right, to make a list of specific pointers that you need to remember. There you add this point also. Any dividend paid will be reduced from the P&L balance in the balance sheet. Then equity share capital is given, general reserve is given, P&L account balance is given. Now, sir, what is this general reserve? What is this P&L balance? This profit and loss account that you see on the credit side of the your trial balance, this is opening balance of P&L. Means over the years, let us say in year 1 the company made a profit of 5,000. In year 2, the company made a profit of 6,000, and in year 2, they declared dividend of, let us say, 1,000. Okay. So 5 plus 6, 11 minus 1, how much do we get? 10,000. This is referred to as retained earnings. What is this referred to as? Retained earnings. Means how much of profit has the company retained in its books of accounts. That means they earned a total profit of 11,000. They distributed 1,000 of profit. So what is left is shown as retained earnings in the balance sheet. Okay. So this P&L account is the opening balance of retained earnings. Historically, all the profits, losses, everything you total, dividend declare, you will deduct, and you will show it in the balance sheet. So then what is this general reserve? Now general reserve is something where you have profit and loss account balance, or you have earned profits during the periods. Companies can transfer amount to an account called a reserve account. Now, sir, what is the purpose of transferring it to general reserve? One very important purpose is, from P&L, you can directly declare dividend. There are no restrictions. But from general reserve, if you have to declare dividends, there are certain rules which we will understand in the later part of this chapter. So, from P&L account, every year, or as per the direction of the board of directors, or as per the decision of the management, they will transfer amounts to something called as general reserve. So P&L balance is total profits earned during different years and accumulated in the balance sheet. General reserve is amount which has been transferred from the P&L and kept aside separately. All right. So from P&L, when we transfer to general reserve, the entry that we pass is debit P&L balance, credit general reserve. So general reserve belongs to shareholders. It has a credit balance. And where will we show this? We will show this in the reserves and surplus. Okay. Then securities premium. Now this you already know. When we issue shares at a value greater than the face value, we collect something called as securities premium. This securities premium balance is also shown under reserves and surplus. Okay. Then we have sales, trade payable, provision for depreciation related to maybe plant and machinery because land cannot be depreciated, and suspense account. So there is something called as suspense account. Whenever suspense account is given in the question, check for the adjustment of suspense account because there will be an additional information related to suspense account. All right. The authorized share capital of the company is 40,000 shares of 10 each. Okay. The company, on the advice of independent valuer, wished to revalue the land at 3,60,000. Now, this is as per principles of accounting standard 10. What is the land at 220? What are they saying? We want to increase it to 360. I have always told you every adjustment has two-side impact. Okay. Now, if I increase the land from 220 to 360, what is the gain? 360 minus 220, 140 is the gain. 140 is the gain. Now, if 140 is the gain, okay, and we have increased the land value, what are the two adjustments? First adjustment, you increase the land value in the balance sheet. Okay. Where is the second adjustment? What do I do with this gain? Now, don't say, sir, we'll transfer it to P&L. Revaluation related gains are not transferred to P&L. Okay. If there is a loss, then definitely we transfer to P&L. But if there is a gain, there is no question of transfer to P&L. So, sir, then where will we show this? This will also be shown under reserves and surplus as revaluation reserve. This will be shown under reserves and surplus as revaluation reserve. So, in this adjustment, you can see one impact is on the asset side, another impact is on the reserve side. Both the impact are on the balance sheet only. There is nothing that one, it has to be compulsorily one in the P&L and one in the balance sheet. Here, both the impact what we have given is as a part of the balance sheet. Then declare dividend at 10%. Now here, few things I want you to understand. What is dividend? Dividend is appropriation of profit or distribution of profit. What is dividend? Distribution of profits to the shareholders, that all of you are aware of. Now, dividend for a year, let us say we are in year 1, year 2. Okay. Now, the company may declare dividend. See, if I draw a timeline, This is 1st of April of year 1. This is 31st of March of year 2. And let us say this is 30th of June of year 2. Okay, 3 dates I have put. The company can declare dividend here. The company can declare dividend here. Both the things are possible. They can declare in the same financial year. They can declare after the financial year. If they declare in the same financial year, we call it interim dividend. What do we call it? Interim dividend. If they declare after the financial year, then that is a part of final dividend. Okay. Now, interim dividends can be declared by the board of directors. Final dividend has to be approved by the shareholders. That is one distinction. The second and the most important distinction is, if I have declared dividend by 31st of March, then I need to account for it. That means if interim dividend has been declared by the board of directors, I have to account for it. However, if dividend is declared after the financial year ends, it has to be accounted in the next financial year. That means any dividend declared after the financial year, will be accounted in the next financial year, not in the previous financial year. But sir, this dividend pertains to previous financial year? No problem. Even if it pertains to previous financial year, please make a note of it in the list that I have told you. Dividend declared will be accounted in the year in which it has been declared. Okay, that is one thing. A lot of students get confused that, sir, this is a dividend pertaining to previous financial year, that is year 1, year 2. So let me account for it in year 1, year 2. That is not correct. Second big misconception which I have seen across many students and in case in some faculties also, okay, that any person, if they have to receive dividend, they have to be shareholder in this financial year. That is not correct. That is absolutely wrong. That is incorrect way of understanding how dividends work. I am telling once again, if a company is declaring dividend for year 1, year 2, okay, you don't need to be shareholders in year 1, year 2. If the company is declaring in, let us say, in the next period, they have declared it on, let us say, 31st of May. Then the company tells you that on a particular date, you have to be a shareholder to receive the dividend, which we call as record date. So the company may say, you have to be the shareholders as on 10th of June to receive the dividend for the previous financial year. So there is no requirement that I have to be a shareholder in the previous financial year to get the dividends. This, when we do accounting standard 13, please keep this point in mind. When we are doing investment accounting, there also I'll come to this in much more detail, but please understand, you don't need to be the shareholder in the previous financial year to receive the dividend of the previous financial year. Okay. Now, here they have declared dividend. Sir, when they say declared dividend, do we consider that they have approved the dividend? Yes. So when they say declared, we'll assume all the process has been completed. First case, they have declared on 30th March. Second case I have taken is 2nd April. Sir, why are you taking two cases? Ready metal, there is only one case. I am taking two cases so that it is very clear how to do the accounting. If 30th March dividend has been declared and it has not been accounted for, then you will account for it. If they declare on 2nd of April, ignore. Dividend declared after the financial year, you will ignore. Please make a note of it. Alright. Then, suspense account of rupees 4,000 represents cash received for the sale of some of the machinery on 1st of April of year 1. 1st April itself they sold. The cost of the machinery was 10,000 and the accumulated depreciation was 8,000. This is a very important adjustment, and when we do the answer, I'll tell you how to logically approach it. So basically what has happened here, they have received 4,000 in cash. They have received 4,000 in cash. They sold machinery on 1st of April. Cost was 10,000. Accumulated was 8,000. Now tell me, what is the carrying amount of this machinery on 1st of April? 10,000 minus 8,000. It is 2,000. At what value did we sell? We sold it at 4,000. See, when we generally sell, we should have credited to the machinery account or asset disposal account. But what did they do? They credited here. So the entry they passed was cash account debit to suspense account. Okay. Now from this suspense account, we have to calculate what is the profit or loss on disposal and how much has to be reduced from the plant and machinery account. This is one adjustment which has to go into the master list of adjustment for you when you revise. Okay. Depreciation is to be provided on plant and machinery at 10% on cost. 10% on which cost? 770. But hold on. There is an adjustment. So what you have to do? There is a disposal. So first we have to take care of the disposal and then calculate the depreciation. So authorized capital is given. This doesn't impact your balance sheet and P&L. It will only impact your disclosures. Clear? Company on the advice wish to revalue the land. So land has an adjustment. Put a small mark here. Suspense account. Suspense account also has an adjustment related to plant and machinery and also provision for depreciation. Then depreciation is to be calculated. So there is one more adjustment for depreciation. Okay. Like this, you have to track it back. Right? You are required to prepare Omega Limited's balance sheet and statement of profit and loss with notes to account for the year ended 31st March as per Schedule 3. Ignore previous year figures and taxation. Okay. So right now I am discussing the question alongside you so that you get clarity on how to understand the question. As we start practicing more and more question, we will just read through the question, look at the adjustment and directly take item by item and post it in the P&L and balance sheet. Again, like we normally do, one full page for balance sheet, one full page for P&L and then for notes to accounts. Okay. So land at cost, plant and machinery at cost, these are items of assets. Okay. Then we have, other items of assets and expenses, and this side we have the liabilities and equity. So we'll start with equity capital. Shares of rupees 10 each, 300, and the amount given is in thousands. So this is what actually 3 lakhs. Okay. Now you can write the answer in thousands also, no problem. Okay. So come to the balance sheet. Share capital, note number 1, reserves and surplus, note number 2, money received against shares and warrant not required. Okay. So come to note number 1, share capital. Now in share capital, please remember they have given us authorized information. Authorized share capital of the company is 40,000 shares of rupees 10 each and 300 has been subscribed. So 40,000 of 10 each authorized. 40,000 equity shares of rupees 10 each, 4 lakhs. This does not enter into the total. Then issued and paid up. How much? 30,000 shares of rupees 10 each. How much is that? 3 lakhs. See, because we are using amounts in thousands, so what I'll do is I'll remove this extra 3 zeros, 400 and 300. Okay. So this 300 comes to the balance sheet, immediately posted here, 300. Don't forget to write amount in thousands. Okay. I hope you are clear. Then we have reserves and surplus. Now in reserves and surplus, they have given us general reserve, P&L opening balance, securities premium, and there is a revaluation of land. So that also comes under reserves and surplus. As far as P&L account is concerned, we'll write it at the end so that whatever is the profit during the year, we can add it. Okay. So first thing what we are done with this equity share capital, done. Then 10% debentures comes under liability, so that we will post it under liability. Long-term borrowings, note number 3. Okay. But first let's finish the note number 2, which is general reserve, P&L, securities premium. Note number 2, reserves and surplus. Okay. Under reserves and surplus, we had general reserve. Then second one, we have securities premium. Securities premium. Then we have P&L balance that we'll write at the last. We said we'll have something called as revaluation reserve. Okay. There is a revaluation of land and we calculated that, right? How much is the revaluation? 1,40,000. So revaluation reserve, you will note down 1,40,000. 1,40,000. Securities premium 40, general reserve 130. Securities premium 40, general reserve 130. Profit and loss account. Opening balance. How much is the opening balance? Opening balance they have given it to be 72. So general reserve is done, P&L is done, securities premium is done, and on this revaluation, balance sheet impact is, where is the revaluation? Here. Revaluation, one impact is completed. Okay. So P&L is 72. So let us just write down profit and loss account 72. 72. Then we will add profit for the year. Add profit for the year, and dividend, depending on what we assume, we will see that. All right. Then, so that is done as far as the balance sheet, reserves are concerned. Then we have debentures. There is no adjustment of debentures. Directly we can take 200. So debentures, long-term borrowings, 200. And please note, even though there is a single item, we have to write the notes. Okay, long-term borrowings. Sir, how do we know it is long-term or short-term? Debentures, bonds, etc. are generally long-term borrowings. Okay. So they have given us 10% debentures, and that number is 200. Okay. So debentures are also done. Then on the liability side, we have trade payables, provision for depreciation is a contra entry, and suspense account we have to close. Trade payable 52 directly we can write. Trade payables 52 directly we can write. Okay. Now come towards the debit side. Debit side, we have land at cost. How much? 220. Plant and machinery at cost 770, and there is an adjustment of plant and machinery. So first we have to close out that adjustment, and then we have to see how to prepare the schedule for the asset account. Now plant and machinery at cost is 770, and provision for depreciation is 172. These are the numbers appearing in the trial balance, and in the adjustment they have told us 10,000 costing. Machinery costing 10,000 has been sold, and depreciation thereon is 8,000. So 8,000 also we have to eliminate. There are two ways to prepare the working notes. When I do cash flow also, there also I will tell you how to prepare working notes in both the scenarios. Follow whichever method you are comfortable with. First method, the ledger account method. Second method, the statement method. Okay. So first let us prepare the ledger account. 770 and provision for depreciation 172. So leave 2 pages for notes, as I told you. Come to working note. Working note number 1. Plant and machinery account. So here we have to balance brought down 770. That is given in the question. Right? Then what did they say? They have told us that machinery costing 10,000 has been sold. So this is plant and machinery at cost. Whenever I sell the plant and machinery, what I will do, I will transfer that amount of cost from plant and machinery account to something called as asset disposal account. That is one way to do it. Okay. So by asset disposal, how much? 10,000 has been transferred. Okay. There are no further information on whether we have purchased any new machinery or not. So we'll just keep it here. Then we have by balance carried down. How much? 76. Okay. So this closes this account. Sorry, not 76. It is 760. 770. Then we have, so we have asset disposal account. Create the account asset disposal. So whatever you have posted on the credit side of this will come here to plant and machinery account. How much? 10. And we have provision for depreciation. Provision for depreciation account. Provision for depreciation account will have credit balance. So by balance carried down 172. 172 only, no? Sometimes you have to be doubly sure, okay? Otherwise, we may end up making some silly mistakes. 172. Out of that, 8,000 is to be eliminated. So why to be eliminated? Always remember, whenever I dispose of an asset, the asset is gone. All the amounts related to that asset has to be de-recognized. Accumulated depreciation and also the cost. So you will transfer that to asset disposal account. How much? 8. 8 is the value which we have transferred. Okay, that is de-recognized. Now what is the balance carried down? Wait, before that we need to compute depreciation before we close this provision for depreciation account. Okay, so here in the asset disposal account, this amount will be credited by provision for depreciation. How much? Then we have sold the asset. When we sell the asset, what do we get? Cash. What is the entry? Cash account to asset disposal account. But here we have written cash account to suspense account. So cash account is accounted correctly. Suspense account has to be eliminated. So from suspense account, we have to transfer that. From suspense account, we have to transfer that to asset disposal account. Suspense account has a credit balance. We will debit the suspense account and credit asset disposal account by saying by suspense account. So 10 minus 8. Sorry, not 10 minus 8. Suspense account we had 4. So 8 plus 4, 12 minus 10 to profit and loss account. Gain. How much? 2 is the gain. So like this, we will close out the asset disposal account. Right? I hope it is clear. Now coming to provision for depreciation, they have told that on the closing balance of 760, that is at the cost basis, we have to provide 10% depreciation. We have to provide how much? 10% depreciation on cost basis. 10% on cost. So 760 into 10% is how much? 76. In the provision for depreciation account, you will say by depreciation 760 into 10%, that is 76. Okay. So to balance carried down is how much? 172. 172 plus 76 minus 8, 240. Balance carried down is 240. Where will we take this 240? In the balance sheet, we will reduce it from the plant and machinery account. This is one way. The other way to compute is plant and machinery at cost 770. Okay. Plant and machinery at cost 770 less cost of plant and machinery sold 10. Cost of plant and machinery as on 31st of March of year 2 is 760. This is the first number. Accumulated depreciation balance as per trial balance 172 less depreciation on plant and machinery sold. How much was that? 8. We'll reduce that. So we'll get 164. Add. What will we add? we will add the depreciation for the year. Depreciation for the year 760, that is 10% into 760. How much is this? 76. So you get 240. Okay. Then gain on sale. Sale proceeds. How much are sales proceed? 4. Carrying amount of plant and machinery sold. 10 minus 8, 2, and hence the gain is 2. So this way also you can do. Prefer the ledger method because that is more logical, intuitive. You will have less chance of forgetting that in the examination. All right. So we have completed the adjustment related to plant and machinery and the related depreciation and also the suspense account. So let us prepare a note for this now. Note number 3, PPE and intangible asset, property, plant and equipment. Note number 4. So in note number 4, what we'll have is, in note number 4, we have property, plant and equipment. Now here we have land. Cost is 220. Add. What should we add? We have revalued the land, right? So we'll have to add the revaluation surplus. 140. Totally we get 360. Okay. Then plant and machinery. Cost. Cost is how much? Now cost we can directly refer to this working note where we have cost of 760 and accumulated depreciation of 240. See, once we have done that in the working note, no need to give all the breakup all over here again in the examination. So cost is 760 from working note number 1. Accumulated depreciation from same working note number 1, we got 240. So 760 minus 240, 7 minus 2 is 5, 6 minus 4 is 2, 520. And 520 plus 360, we get how much? 880. So this is the amount to be shown on the face of the balance sheet. Okay, 880. So property, plant and equipment here 880. Please remember there is a gain that you have to record in other income. Don't forget that. Okay. So we are done with land accounting, plant and machinery accounting. Depreciation part is also completed. Trade receivable 96, directly we can post. Inventories 86, directly we can post. Bank 20, we'll have to prepare a schedule, or because it's just bank, we can directly write bank 20. So 96, 86, 20. 96 trade receivable, 86 inventories, cash and cash equivalents 20. You can write here bank or prepare a separate schedule or working note. Okay. So trade receivable is done, inventory is done, bank is done. Adjusted purchases will come to P&L account. Okay, will not have nothing to do with the balance sheet. Factory expense, admin expense, selling expense, debenture interest, interim dividend, all of that will do it later and come to the income side. Okay, so there is no other item in the balance sheet where we are saying, okay, how much has to be done or what is to be done in the assets or liabilities. Everything has been posted other than P&L balance. Now come to P&L. In P&L, revenue from operations. What is that item? Revenue from operations. We have sales. So sales are done of 700. Revenue from operations 700. Here you can write sales. Then other income. Now for other income, let us have a schedule number 4, depends on what you write, depends on what you write as other schedule number. Other income schedule number 5, okay, that is gain on sale of machinery. 5 is other income, gain on sale of plant and machinery from working note number 1. How much was that? That number was 200, right? Not 200, sorry, that number was 2000 was the gain. So other income is 2. So here under other income you will mention 2, right? So 700 plus 2, we get how much? 702. Simple. Then under expenses we have cost of material consumed and all of that. Let us see what all details do we have. Do we have cost of material consumed? They have not mentioned whether it is raw material purchase or whatever it is, right? So what we can assume, either we can assume that purchases is raw material and accordingly to it, or we can assume purchases is your finished goods purchase and accordingly we can do it, right? So adjusted purchases is 320, inventory given to us is 86. Now here is where you have to pay attention. This adjusted purchases, this is working note, sorry, working note number 2. What is this adjusted purchases? Adjusted purchases is when you have considered opening stock plus purchases minus closing stock. In other words, it can be your cost of goods sold. Okay. So adjusted purchase generally could mean purchases minus closing stock, or if opening stock is also not given, it could mean opening stock plus purchases minus closing stock. Okay. Now here in the question, they have not given us what is opening stock. So then what should we do? If nothing is given with respect to opening stock, you can assume it to be 0. Sir, how can a company have no opening stock? Just assume they have sold everything at the year end. Okay. At the beginning of the year actually. Opening stock is 0. Now adjusted purchase is purchase minus closing stock. The word adjusted means from the purchases, I have adjusted the inventory at hand. So if I purchased 1000 and I have 100 of inventory in hand, my adjusted purchase is 900. Now here, how much is the adjusted purchases? Adjusted purchases, what they have given is 320 and inventory at hand is 86. Now this 320 is arrived at after deducting 86 from the purchases. So 320 and 86. Adjusted purchase 320 is equal to opening stock plus purchases minus closing stock, which is opening stock is 0 plus purchases we do not know minus 86. So 320 is equal to purchases minus 86. Purchases is equal to 320 plus 86, that is equal to 406. In the examination, simply we can do, if you want to calculate purchases, to the purchases add closing stock and reduce the opening stock if opening stock is not given in the trial balance, and if opening stock is not given in the trial balance, they will give that opening stock information sometimes in the adjustments. Okay, if that is the case, you can do it. Otherwise, simply in these type of questions in the examination, simply do purchases is equal to adjusted purchases plus closing stock, you will get your number. This is one formula, you can make a note of it. So 406 is the purchases. So here you will input purchases as 406. This comes from working note number 2. Then changes in inventories of finished goods and WIP. Now here is where you have to pay attention. I told you, if closing stock appears in the trial balance, you will show it only once, correct? Now here closing stock is appearing in trial balance. We have already showed it once, but we have also increased the purchases. We have also increased the purchases amount. So basically what did we do? We added inventory and purchases. We added inventory and purchases, which means now this inventory is as if we have moved it out of the trial balance. Okay. So 86 is the inventory, closing inventory. We need to compute changes in inventory. Now, how much is changes in inventory? Closing stock and opening stock we need. And I told you the formula, opening stock minus closing stock. Do we have opening stock? We don't have. What did we assume? 0. What is the closing stock? 86. So 0 minus 86 is my changes in inventory. 0 minus 86, opening minus closing. Employee benefit expenses. So now let us start looking at other expenses. Do we have employee benefit expenses here? They have not given. Okay. So adjusted purchase is done. They have given us factory expense, admin expense, selling expense. Where do we take this? Other expenses. Debenture interest 20. So debenture interest is a finance expense. Finance cost is given here. So note number 6, debenture 20. So here in note number 6, you will say finance cost. What is the finance cost? Debenture interest. How much is that? 20. No hidden adjustment. Done. Then we have these expenses. Factory expenses 60, admin expenses 30, selling expenses 30. 60, 30, 30. So note number 7. Other expenses. Okay. Factory 60, admin expenses 30, selling, what was the name? Selling expenses 30. So 60 plus 30, 90 plus 30, 120, posted as other expenses. Other expenses 60 plus 30, 90 plus 30, 120. Depreciation and amortization expenses, we have already done it in working note number 1. So wherever you have working note number 1 done, you can refer that to working note also in the examination, no problem. Okay. So from working note number 1, we have got the value as 76, no? Depreciation for the year. 760 is the balance, 76 is the depreciation. That is the amount to be shown. Here you have 76. Okay. Interim dividend paid and dividend related adjustment is to be done in the balance sheet, not in the P&L. Okay. So one thing for all of you, sometimes you might get confused. This provision for depreciation is the total depreciation till today. And the depreciation just now what we posted, 76 here. The depreciation just now what we posted is for the year. In the balance sheet, you will take opening provision for depreciation plus current year depreciation minus any depreciation which is related to assets sold off. So let us do the total. 702 is the total income. Total expenses 406 minus 86, 320 plus 20 plus 76 plus 120. Total is 536. Total expenses is 536. Okay. So what is the profit for the period? 702 minus 536, directly profit after tax. Here you can say 166. All this information is not needed. Okay. 166. Now where do we take this profit? This profit will go to the balance sheet under reserves and surplus. Profit for the year 166. We add. Now here we have to reduce interim dividend paid, or if you have paid final dividend also during the period for the previous period, that also will reduce. Any dividend declared during the period we will reduce. Interim dividend paid 180. Interim dividend paid, sorry, 18. So 18 will be reduced. Will reduce interim dividend, which is 18. Please make a note in the list of your adjustment. Only dividend declared during the period will be reduced. Dividend declared after the period will not be reduced. Sir, why are you repeating this again and again? Because you will get confused with events occurring after the balance sheet date and you will make a mistake in the examination. Okay. Sir, then what about this dividend adjustment? For this dividend adjustment, right now what I am solving is dividend has been declared on 2nd April. If dividend has been declared on 2nd April, that is after the period ends, okay, we are not adjusting that in the balance sheet. Okay. So we'll not adjust that. How much is this now? 130 plus 40 plus 140 plus 72 plus 166 minus 18, we get 530. 530, you have to write it down here in the balance sheet under reserves and surplus, 530. So 300 plus 530 plus 200 plus 52, we get 1082. 880 plus 86 plus 96 plus 20, we get 1000. 1082, 1082. Done. Okay. Now, second scenario, what if the dividend was declared on 30th March? If it was declared on 30th March, then it should have been the interim dividend only. So already declared 18. We are further declaring how much? 10%. Always remember, dividend is computed on the face value of the shares. Okay. What is the face value? 300. Paid up capital is 300. So 300 into 10%. Why am I using the calculator? 300 into 10% is how much? 30. 300 into 10% is 30. Now, if 30 of dividend is declared, okay, now please remember, this dividend has been declared on 30th of March and this dividend has not yet been paid. So, what should be the entry? Entry should be to dividend payable 30, and what we will debit? We will debit P&L account balance 30. Now, this P&L account debit is not done on the statement of P&L. This P&L account debit is as a part of the balance sheet adjustment. So what we will do, if dividend is declared before the year end, then two changes will happen. First change, from this reserves and surplus interim dividend paid, you will further reduce 30. Just give me a moment, the pencil went off. So, if dividend has been declared before 31st of March, then alongside this interim dividend, you will also reduce one more 30, not minus 30. One more 30 you will reduce for the dividend declared. So, this 530 will actually become 500. And as I've been telling you, every adjustment should come how many times? 2 times minimum. Okay. Sometimes there may be 3 appearances also, partly here, partly there, but for CA inter level, you can just say 2 times for most of the cases. One I have reduced here. And so what I have done, I have reduced the P&L balance. Second, what should happen? Second, this 30 should appear as a liability because we have not yet paid. So where will that liability come? That liability will appear here. So what will happen is, this 530 will become 500 and this 1082 will become 1052. Sorry, it will remain 1082. Under other current liabilities, you will have 30 for dividend payable. Okay, that will show under other liabilities. Right. So you can do it this way depending on what is the question. Typically in the question, what they'll give in the exam is that it has been declared on 2nd, so that they can confuse you. Okay. And I've seen students, in the class you will understand, yes, only dividend declared during the period we have to consider. In the examination, you will start doubting yourself. Should I adjust? As per ACE 4, as per this, as per that. Don't get into all of that confusion. Single statement you have to keep in mind. Dividend declared during the period should only be accounted for. Okay. I hope you got good clarity on this question, and we'll conclude the session here. Again, we'll meet tomorrow with one more question. Thanks a lot.